coming to you from CME Group trading floor. Today's session is far enough or further to go, market fear or market friend. What I'm making reference to, of course, is we barely are just at the threshold of a 10% correction. Literally speaking, if you take a look at the best level at the year high, we're at plus 15% at the year high. Right around September expiration was 914.12. Since then, we've backed off. We're at exactly a minus 8.8% from that year high. A lot of times what we look at when we see things like this is where we see a funds flow where they would be enticed to see relative cheapness. That usually occurs in and around a 10% retracement. Let's look at some other things, if you will. That would motivate this action here, even in light of what we're seeing where, number one, that's negative is, of course, the whole European model is back in recession. The U.S. is at a do-or-die state with respect to the fiscal cliff right on top of us. And additionally now, you have the Israeli conflict that's beginning to escalate with much further and much more casualties. Having said all that, what you want to do is you want to perceive where relative cheapness is. Again, we are 8.8% off the high. The funds flow, a lot of times you see relative cheapness at a minus 10%, which we're very close to. And additionally, you have the Christmas spending season and the January effect that you see in stocks that usually starts as we go into our December expiration. What that motivates us to do as a trade is look at cheap outside calls. Here's what I mean by that. As an example, the expiring December S&P futures 1425 calls are currently trading at $2.80. Those would be a great buy. Additionally, the S&P December expiring futures call $14 calls are trading at $6.75. Again, that would be a great buy as well. You look at the moving averages. We're a lot cheaper than the 50-day, 14.29. We're a lot cheaper than the 100-day, 14.04. We've even gone through the 200-day moving average, which is 13.82. Another thing that a lot of the technical guys like to look at is that we've had a 50% correction off the top, which we've gone through, which is 13.70, and we are right on top of a 618 retracement, which is 13.46. Again, I think that motivates a lot of the money managers out there to look at perhaps we've gone far enough where we can get a decent bounce, and we look at relative cheapness. 618 is a big technical level for a lot of people. A lot of people follow that fib retracement. And that would be the trade that would probably be the most cost effective and the most risk effective as well. Again, play the moving averages smartly. This is Rich Canlione from CME Group Trading Floor signing off. Thank you.